How are you, everybody? Ramesh Fakori here at the IRA Club. Precious metals is the topic of discussion today. As you can see, the importance of gold in your IRA.
Well, I'll give you a quick introduction. Goldcore is 18 years old, and we were established in 2003. I'm a director here at the company. We are headquartered in Dublin, Ireland. We have an office in London. We have an office in Galway. And we also just opened up an office in California. We've always had a lot of US customers who have found us. We're quite well known in the industry because we specialize in the storage of precious metals. So inflation is taxation without representation. So Milton Friedman came out with that quote, and I always thought it really sums up what inflation is. It's always a monetary phenomena, it's been called, which is that it's a product of man and politicians. It's not a natural occurring phenomena. And when you bring inflation into a monetary system, you're devaluing the buying power of that currency, which, you know, you can understand why they might want to do that on a short-term basis in an emergency. But when they do it over a long term, it erodes the buying power of your money, and it's after tax. So you've paid your tax, now you have your money, and then they start to erode it again, which is another form of tax, which makes it quite dangerous. So here's a challenge. Supposing the inflation rate was 7% per annum right now, how many years would it take for your money's buying power to be halved? I want you to think about that. So it's 7%. How long before your money actually loses half of its buying power? I'm going to give you the answer at the end. So pay attention and maybe have a think about it. So who are we? As I say, we're established in 2003. We have about 120 million in turnover a year. We have about 9,000 active clients. About 60% are in Ireland and the UK, and 20% in the United States. And the USA is our fastest growing market. So that's growing a lot. A lot of our clients will store with us in Dublin, London, and also our most popular is Zurich. But for pension accounts, our IRA accounts in the US, it's going to be stored in the United States through the IRA Club. 75% men, our client profile will be 75% men, 35 to 75 years old, well-traveled, director types, people who are, I always say they have a healthy degree of skepticism, which is a great way of kind of describing people who don't take everything they don't accept everything when they hear it first. So they do ask good questions, and they're well learned and maybe students of history. We deal with pension fund, private clients, and companies. And if gold and silver is 10% of our average clients' investable assets, and we manage around 320 million at the moment, that would infer a client asset base of around 3.2 billion. So so if you choose to become a customer of Goldcore, you will be in very good company. And our annual assets under management is growing at around 10 to 30% year on year, which is really phenomenal and an outlier in the industry. We also work with the Perth Mint in Western Australia. They're one of the largest providers of precious metals on earth. I think about 20% of the refined gold goes through them, which is quite incredible. And this is a quotation from their depository manager. You don't have to read the whole thing, but I suppose in the second paragraph there, it talks about that we operate at the highest levels of integrity and professionalism. And we've done about 500 million in business with them over the years. So I think they know a thing or two about us, and they are as trusted as they come. Just wanted to show you the assets under management that we have growing. It's around 15 to 30%, depending on what's happening in the market. You can see the silver line there is silver, or the gray line is silver. And on the left-hand scale, that is in millions of ounces. So we have around just over 2 million ounces of silver stored on the shelf for our customers, which is phenomenal, and it's growing at a pace. And this is really because of the way we go about storing it. As I said before, segregated, allocated. That is the safest way we know that can be done. You can store metals. And on the right-hand scale, you have gold, which is also moving in line with silver as well. And we're storing around 80,000 ounces of gold. So all in, it's about 220 million there in stored assets, and another 100 million or so with the Perth Mint, around 320 million at the moment. In the last 14 years, they have printed around $20 trillion of fresh money with a stroke of a keyboard. Right across the world, central banks are doing this. And it's, as I said before, you could argue in the short term why you might want to do that in times of war or something like that, but on over a longer term, it has a very, very dangerous impact on our economies. We'll go into that in a moment. Global debt has moved to around $255 trillion, which is about three and a half times the total GDP of the earth. At the global financial crisis back in 2009 or so, there was around 240% debt to GDP. So it's now up at 322%, which is a relative measure of how dangerous the situation has gotten. And it seems like the only strategy these officials have is to just keep depreciating and devaluing our currency, our savings, our pensions. And that's why risk assets such as equities and property and all these things have gone up in price, and gold for that matter, because the denominator, that is the money that you're measuring value in, is being printed. And so it is increasing. So have assets gone up or has the money gone down? I'd argue it's probably more of the money going down than the assets going up. So it's a bit of a two-card trick if you think about it. The population on a demographic basis is set to grow by 42% by 2050. That's an astronomical amount of new people, new mouths to feed, air to breathe, cars to drive, right across the earth. And if you think about it, back in my grandfather's time, back in the early 1900s, there was probably about 1.5 billion people on the earth. So soon to be 10 billion. We are out of control as a species, you could argue. As you might know from science, is systems tend to collapse, and they don't do so in a gentle way. They tend to completely implode. So is the human population set to grow to a state that we can't control, or that becomes self-defeating? I don't know what the answer is, but I do know that there's a huge challenge ahead. We have to figure out how to feed these people and do so in a way without going to war and fighting over resources, precious resources such as clean water. So I don't know where that's going to go, but it's not going the right way. There's also an awful lot of geopolitical risks, as you know. EU cohesion. The EU is probably the largest middle-class market in the world. There's about 450 million people on this side of the pond, and they're fairly wealthy, and they buy and consume an awful lot. And there's a question mark over the cohesion of that project and what's happening. There's war in Europe for the first time since Second World War right now. And these things do get out of hand, and they don't necessarily go to script. Italy, if there's a debt crisis, will Italy stay inside the EU? I don't know. It's arguably they are highly leveraged, and if there is another debt crisis like we saw in 2011 and 12 with Greece and other countries, maybe Italy would be forced out of the EU. The rivalry between China and the US is increasing significantly, US versus Russia. And now we have China aligning themselves with Russia. And people are looking at the Taiwan Straits and wondering, will China make a move on Taiwan as Russia did with Ukraine? I don't know. It's a big question mark. And then the US dollar. Is it going to remain the preeminent currency in the world, in a multipolar world? I think one of the biggest stories to come out of the Ukrainian crisis isn't the war, as tragic as that is, but it's actually the weaponization of the US dollar window. That is the ability for central banks and their local banks to trade dollars. The Russians and a lot of Russian banks were taken out of the dollar window within a matter of days. And even more significant, arguably, the entire Russian population was taken out of Visa and MasterCard overnight, you might say. I think it was around 6 or 7 days they were taken out of those systems. That has never happened before. And what that means is that the US dollar and currencies are being weaponized in order to bring force and pressure to bear on adversaries. And what that then means is these countries are less likely to embrace dollar trade, maybe euro trade, pound trade, and they may want to use their own currencies or set up their own currency blocks. That is a fracturing global geopolitical situation, and I'm not sure where it goes. We also have trade wars, and trade wars are also currency wars. That's when countries try to pump up the value add of their exports by depreciating their currencies relative to the export markets. And then all that does is a tit for tat. The receiving country then also depreciates their currency, and then they start slapping on tariffs, which is what's happened in the Trump years with Europe and other trading blocs. And ultimately, the consumer pays. I mean, it's a complete fallacy to think that, you know, by the U.S. government putting a tariff on a Chinese import that China is actually paying that price. They're not. The U.S. consumer who buys the good is paying that extra tariff. And also now we have pandemics, as if you didn't need anything else. So the situation geopolitically is quite dangerous at the moment, and any one of these things could get even more serious. The U.S. economy, let's get really depressing here. So I pulled some statistics there today. The debt clock, I don't know if you ever look at it, you can download the debt clock app onto your phone. It's absolutely fascinating, especially if you like numbers. People in the U.S. economy who are not working, back in the year 2000, when I was in New York, I used to work on Wall Street there. There were 81 million. Now there are 99 million people not working in the U.S. That's an increase of 22%. But the people who are supporting them, the workers, there was 159 million. Now there's a little bit less, 158 million. So that is a very dangerous situation. Obviously, an awful lot more people dependent on the same amount of workers. But if you look at the median income, it was $31,000 back then. It's now 35, which is really not much of a raise, 12%. And if you look at the median household income, household price, it was back 164,000. And now it's 403,000. So even though there's a ratio, you can see it's enormous. It's completely detached. It's up 140%. Median car, 31K versus 49K. It's up 58%. And if you look at the deficit that the U.S. federal government run relative to GDP, it was 2%. Now it's 8.23%, which is a massive jump of 400%, which is just incredible. And the total federal debt as a percentage of GDP has gone from 57% to 129%, which is 226%. Essentially, the economy is being massively mismanaged. And it's not a political statement to say so. It's not Democrat, it's not Republican. It is just right across the board. Every politician of every ilk is mismanaging the economy, and the workers are picking up the price. And I'm going to show you a slide in a moment that really is quite sobering. And this is not just in the US. This is actually, you're seeing this right across the world. I think the median income figures there are more local to the US. I think it's terrible that the average worker has not really participated in the rise in asset prices, because they don't own stocks and they rent their houses. I think that the story behind these numbers is the increase in debt right across the board. So let's have a look at this chart here. This really brings it back to bear. And this is inflation. Inflation is not a Ukrainian war situation. It's not even an energy situation. It's not a food situation. It's a money printing situation. And it was only a matter of time before these commodities all started to rise in price. And if you look here, this chart's quite a lot going on here, but the left-hand side is the S&P 500, probably the de facto stock market measure, the top 500 companies by market cap in the United States. And you can see the left-hand side there in the global financial crisis, just in March 2009, the S&P in red fell to 666. And recently it rose to about 4,800, an incredible return over such a short period of time. One of the biggest bull market runs we've ever seen. But interesting enough, that blue line is the central bank's balance sheet of the Fed, the ECB, and the Bank of Japan in dollars. And what you can see is that they're one for one. It's no accident that the more money that is being printed, the higher the stock market goes. And the people who own the stock market are the wealthy. They are the richest people. They're not the poor people. Poor people don't have stocks for the most part, but the rich do. And so this has been an experiment where they have printed money, devalued currencies in people's bank accounts, increased the cost of living, and enrich the rich. And I'm not a socialist, I'm a capitalist, trust me. This is not capitalism though, this is corporatism. So it's a shocking state of affairs. And you do talk to economists. I was at a conference there in Barcelona there last week, and there was an economist from the Spanish central bank. You know, that it's quite sobering. They were looking at similar numbers to this, and they can't really explain it, but we can, because we can see it right here. So let's move on. So gold as a strategic asset. This is a great, the World Gold Council kind of represent a lot of mining companies, but they do a huge amount of research, and they really can talk about gold's role in the world. They did this great report every year as gold as a strategic asset. And in the 2020 report, I thought it was really quite good. They came up with an allocation of between 2 and 10%. On average, actually helped U.S. pension funds when they did a study for about 20 years, and they figured between 2 and 10% was kind of the number that would be great in a portfolio to reduce risk and enhance returns. They did the numbers, and here I have them right here. Now this is a little out of date. It's 2019, as of 2019, but it's over a 20-year period. Now, the way you measure how valuable a component is in a diversified portfolio is you say, on average, annually over a length of time, what's the annual return? But also for that annual return, how much movement are you getting? How much volatility? How much up and down movements are you getting? In the perfect portfolio, you want to add components in there that reduce volatility and enhance return. That's a free lunch. So if you look at the far right, you can see that they've looked at gold, no gold and some gold, 5% over 1 year. They can see that actually the second line there reduces volatility from 7.4% to 7.2%, and it impacted returns by 0.2%. So that's a great result there, to have gold in there over 1 year, which is a very small time frame. But on a 5-year, again, it reduced volatility from 7.4 to 7.1. So gold was very important. And on the 10-year, it went to 8.3 from 8.6. And on the 20-year, which is really the one you want to be looking at, gold at 5% actually increased returns 6.5% and reduced volatility substantially from 10% to 9.7. And you run that over your entire on an annualized basis each year, and also you do that over your entire retirement cycle. That's a meaningful number. So and gold tends to be that bellwether investment. It sits there as a cornerstone asset, almost like a foundation, like what you'd build your house on, firm foundations. And it's interesting because you don't own gold to get a return. You own gold in order to have diversification. So if the market was to drop 50% and yourself and your friends are all in the market, if you have a component of gold there and the market goes down 50%, it should, and there's no guarantees, gold should start to rise as people move out of risk-on assets, which are equities and bonds and things like that, to risk-off assets, which are other types of bonds and also currencies and metals. And those things tend to rise in price as people rush to safety. So it's a good idea to have something in there that will protect you from those downside risks that every market has over time. Moving on here, I love this chart and this quote from my fellow Irishman, George Bernard Shaw. If you have to choose as a voter between trusting to the natural stability of gold and the natural stability of the honesty and intelligence of the members of the government or central banks, I can add that in there, with due respect for these gentlemen, I advise you, as long as the capitalist system lasts, to vote for gold. And what we're looking on the right there, again, this is from the World Gold Council, is every currency from 1900 and the amount of depreciation it's had. So they all start at 100 and they all end at fairly zero, or as close to zero as makes no difference. And yeah, I think in the last 100 years, the dollar has lost about 98% of its power. I think the euro has already lost around maybe 30 or 40% since it even came out back 20 years ago or 30 years ago. Sorry, 20 years ago. So it's lost a substantial amount. And inflation means it's losing more, by the way. So there you have it. So we expect gold prices to move higher in response to inflation. Once inflation starts to bite, and it hasn't bitten yet, you'll find that people in your network have not stopped going on holiday. They may be thinking about pulling in their, tightening their belts right now. But towards the end of the summer, we think it's really going to bite, and perhaps, no guarantees, gold prices will then start to take off, and silver for that matter. So how do you work with Goldcore? Well, moving on here. So on the left-hand side of this chart, you have all these really, really well-respected mints. The Perth Mint, we saw a quote from them earlier. And we have all the top investment providers in the world. We basically work with all of them, these guys produce investment grade bullion, which is 0.999% proof, and it's not really jewelry; it's investment grade. And then we work with the best storage companies. I should have Brinks in there as well. We work with the best storage companies, and we store on a segregated, allocated basis, which is on the right-hand side there. So we currently store in Utah, Delaware, and also Texas. And we do so very, very quickly. Our systems and technology that we have in Goldcore is second to none. We can settle much faster than most other companies can, and in a much safer way. And as I say, we segregate everything as well, so the client is always kept whole. Now, this is the worst slide ever. There's an awful lot of information in here, so I'm just going to paraphrase it if you don't mind, and please forgive me. Number one, all physical assets are held in custody under bailment. Really important term, bailment. A lot of providers don't do this, but bailment means that it's always your asset or your pension's asset stored in our vault. Think of it as your car parked in our car park. It's not our car because you parked it there. We can't take it for a ride or go for a spin. It's your asset, always your asset. It's never on our balance sheet, and we can't do whatever we want with it. We can't do anything until you tell us we can, or your pension provider IRA club tells us. Segregated, allocated, I've gone into that. Non-bank vaults. We don't store in the local bank. We're outside the financial system. For the most part, all of the assets, physical assets, are stored outside the financial system in places like Switzerland, but also in Utah and Texas and Delaware. Fully insured, we have insurance certificates available for inspection whenever you want, and we do independent audits every year. And we only trade the highest quality. London Bullion Market Association, that's kind of like the de facto regulator for the industry. We also work very hard to get the best possible prices. We're not about price gouging. Nobody who works for Goldcore is paid a commission to make a sale. Everyone is paid for performance, which is based on the client experience and the feedback we get from clients. And it's the best way to serve our clients' interest, because sometimes it doesn't make sense for you to own metals. You may already have too many, or we may think that you don't know. You're not comfortable making that decision just yet, and we'll push you back. It's all about you getting a positive client experience, and that's really what's important. For the last 12 years, we've asked every single trade to give us a rating out of 5, and those ratings go up on our website, and we can't control what they say. So we kind of live and die by what our customers say. We're currently 4.8 out of 5, and we've been doing this for 10 years now, since 2012. And we have it's not 2,500, 2,600 reviews. They're all up on our website. Read them. They come in every day. Every one of them is a real person. And you can ask anyone at Goldcore. We live and die by those, and we're very proud of our record. Vigilance and care. As I said before, we're sitting on the wall. We're looking at all these markets. We have customers everywhere, just like you. They tell us stuff. We tell you. We together are a network. We help each other, and we keep each other safe. If we think something's not right, we're going to tell you to do something about it. Case in point, Hong Kong, 3-4 years ago, the umbrella protests. You may remember the students and everyone was on the streets. They were worried about China coming in. The system began to deteriorate. They started the rule of law was in question. We examined our insurance contracts. We found that these contracts were exposed to civil unrest. And so what did we do? We contacted all our clients and we said, hey, why don't you move your assets to Singapore? It's just down the road, much easier. 97% of our customers said yes. Everything's segregated, so it's actually ready to go out the door already, and it's already separated out. So there's no detangling assets and holdings. Nobody's sharing any bars, you might say. So we moved that and we got everything to Singapore. Everything was fine. Thank God Hong Kong didn't deteriorate into chaos, but we were ready and we moved ahead. So that's just a case in point. Here's how you invest. You have gold coins, gold bars, gold, silver bars, silver and bars and coins. There's some pros and cons here. Basically, gold coins, smaller, divisible. You can sell 1s and 2s, but they cost a bit more, 3 to 8% to buy. Gold bars, there's a lot less manufacturing that goes into gold bars. So when you buy them, you can get them cheaper. You have the premiums there. And if you're doing large amounts, and we do 7-8 figures, on a fairly regular basis, you can get more discounts and you can get more economies of scale. We also do silver bars and coins. They tend to have higher premiums, but also higher potential returns. So if gold goes up 5%, you might see silver going up 10%, and vice versa. If gold goes down 5, silver drops 10. So it's kind of a more schizophrenic, but it's great. I own silver in my own pension, and I own gold as well. And I think they perform a very important thing. So I store them at Goldcore as well. So my money is also in Goldcore's vaults as well. The order process, very simple. Once you open up an account at IRA, or you have an account at IRA Club, and your fund is verified, you can simply place an order through them, and we will then take that order, execute it right away, and look to settle it straight away as well. And you will have physical gold outside the financial system, ready there, doing its thing, protecting you as well. These are popular products. You have the various different coins from mints around the world. You have large format gold bars as well. And I'd say there's an economies of scale there too. The bigger, the uglier, the cheaper. And that's always a good way to go. And we actually want you to get the cheapest premium. We're always going to work to get the cheapest premium. We're not going to upsell you or sell you some sort of fancy thing. I would strongly advise you to be very careful of dealers who advertise on TV. They will tend to sell you, or they can sell you loss leader. They advertise the loss leader product, but then they cross sell you into something that's very expensive and not worth the price that they charge. So be very, very careful. If you call Goldcore and you're looking to set up an account, Matt will help you. Thank you so much for the opportunity. I really enjoyed the
Take care, everybody. Be safe. Bye-bye.
Bye-bye.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.